So there's two types of funds. The first one is close-ended. You'll tend to see that a lot in real estate, where they have a purpose that has a term to it. It might be typically in real estate, it'll be 5 years, 7 years, 10 years, could be longer, where the fund raises the money it needs to do whatever. Let's say it's going to build an apartment complex or apartment complexes. It raises the money it needs to do its project, and then that money is portioned out of the fund as the development life cycle happens. Um, and then the investors are all rewarded at the end of that term, and their money is released. An open-ended fund is a little bit different because my one fund would be a similar example that most people would be familiar with would be Berkshire Hathaway, where they can continue to raise capital and acquire companies as they see fit over a period of time. That does not mean that the investor money can flow in and out like it could out of a stock investing account. All funds have something called a lockdown period, where that initial investment is locked into the fund for a period of time. And after that period of time, the investor does have the option to call their capital out. But the biggest difference between open and closed is that a closed fund has determined its lifespan in advance. So at 10 years, that fund will, although there may be a rollover period that the fund manager has, let's say the economy's being weird and it's not a good time to exit that apartment complex, then they can roll over the fund for additional years. But with those types of exceptions, the fund has decided that in 10 years it will cease to exist, whereas it is an open-ended fund. We can continue to exist in any form that we think is best for the fund and the investors over time.
Okay. Well, it sounds like that the open-ended fund, it gives the investors a lot more flexibility, right? It sounds like it's more, you can pull the money out at any time. So why would someone even choose a closed-ended fund if you can do open-ended fund and just, have the flexibility at the same time?
Yeah, I mean, if an investor wants